Hello and welcome. It is the 29th day of August 2019. Time for a precious metals update. Going to show a lot of different ratio kind of charts in here. The gold to Dow, silver to Dow ratio, palladium, platinum, and a whole other bunch of different things like that as well, along with all the normal stuff. All bets, trades of the like with each his own risk and their own reward. I play gold and silver is in the physical metal and the 999 form, 24 karat gold is other may call it as well. And gold is doing very well right now as we look at the daily chart and holding and staying above this 18, I guess above the 18 highs as well. But getting staying above this Fibonacci line that was resistance for a little bit, had a very nice small little pullback into the 18, leaving it on the 23rd or late last week, and then just doing this holding and staying above, and then you have this little period that has like an up move closing where it went from. People might call that bearish. I'm like, okay, well, it came back to where it came from. What are we going to do now? And what it's done is had a little bit of rally lower than this high, but hanging in there as a trend over the last several days is most certainly still in that of an uptrend, even though today is just continuing to pause in there as price action is down like $1.70 some odd cents for this time. Now two and a yeah 166. You can see it on the top part. Really not much of a move. And as we look at this on the shorter term time frame, there is this from this move coming in and correcting very well so far within the 18. This is the first time on this time frame it's been a little bit below it, but still holding in there very well. And as it goes within the monthly, of course, it's had this level of resistance hit. Still, how are we going to play from this? It could pull back, and we still are well above the 18 average, an area I'd be looking for support if it goes there. Well, I'm always going to be looking for the 18 average of highs and lows for the next move, regardless. But I'm only going to be looking for this level of support if it doesn't go way high. Meaning, if this thing goes up to like 16, 17, 1800, I'm going to be like, okay, yeah, I want to see it hold at the high, lowest, be like 1430. If it goes to 1800, yeah, I want to see it hold like 1480 or something. And then, of course, if it goes much higher, say it goes to like say 24, yeah, I want to see it hold 18 on a pullback. But always the 18 average will just rise and stay within it. And it's got to pull back at some point. It could easily do so as it is now, but it's so wild card at this point. If you don't find resistance in spots where you're supposed to, the moves can get very, very, very wild. Still, in the short term, as we're not seeing much evidence that the long term is going to be showing that it's starting to revert over. And until we see weakness down below here, right now, I still have to give the benefit of the doubt towards the buyers. Now let's switch it over to silver, and silver's not. I guess it's having a somewhat of a pause-ish kind of moment, but not really. It's up today. It's up 1%. Yesterday it was up almost one at 0.85. Day before it was up 3.05. Day before that almost 1.5, and the day before that a little over two, or basically two. It's gotten above this resistance at 17 and a third. Now it's hanging in there at 18 and change. This is a phenomenal move that has taken place. I'm gonna have to push the print screen and draw a trend line. Usually, what I'll say sometimes is I'm not gonna draw a trend line, but if you draw a trend line connecting these highs, then it's look like it's breaking it. But I actually am gonna draw a trend line because I find it a little bit of interest. So I'm gonna push the print screen button on my keyboard, which I've just done, and move this into Paint. Okay, there we have it, and draw the trend. So we'll connect these highs in here, and there we have it. Now, in one way of trying to calculate a target for where a break of this trend line would go, one way I would look at it is I'm going to draw another trend line like this, and move it down. And this is tough one because this usually if you do it, I probably pick like around here, but there is no amazing resistance matching the exact rate of support. More times than not, it does, but not here. So then I'm just going to just highlight this and copy. Actually, I pushed cut by mistake, but that still works, and I can paste it. And I'll just match the line like that, something like that. Then I'll draw another line to match that rate of ascent. And I'm not going to give you what these levels are, mainly because I'm not satisfied with the fact that I couldn't find a great support line. So my rate of ascent differential from top to bottom already could be off. But if we're going to have a break of this resistance, I would expect it to hit this line, which is a rising line as time goes on as well. Okay, back to the trading view site, but that's something of worth note that it has broken a 1, 2, 3, 4 hit level of that resistance. It didn't stop going up around $18 here, and has kept on going. So okay, guys, wait a second. This is getting relatively interesting. So what does this mean on the more longer term? Well, 3 day is well overextended, as we had a move up to 16 and a half, 16 and 3/5, small pullback. Then we had this move up to 17 and a half, small pullback, and now we're having this move now. Well overextended of this high. Again, we're supposed to stop going up. So if we don't stop doing what we're supposed to, this thing could go haywire crazy, at least to its next level. And I say next level because we're really low as far as where we need to go, as volatility has been taking a shrink move. On the weekly chart, getting above this level of resistance, getting above this congestion area, over this support, over this last level of resistance point, where it's now at the upper end of this range, because we had the range bound market that went on through 2017 into 2018, but the range bound market continuously had lower highs. As we had 1, 2, like 3, 4, 5, or I guess this one wasn't matching, or matching or lower highs, I guess is another way of putting it. But well extended again from this 18. Always going to be looking for this as one of the areas on any type of corrections via that of price and or time. And the must hold area right now, I'd have to think, is around 16, this previous level of resistance. And I don't think there's a much chance that it goes below, but you never know in these manipulated markets as well, or all these markets for that matter. And within this, it's just starting to break out on the monthly chart. It's nowhere near majorly overextended. If needs, maybe can have a little bit of a pullback, but this thing really won't get overextended until we at least get up to around 21, as we look at it in here. But it's exitation of the 18. It's the second one that is going on. And with all of this move that's been taking place, of course, now we look at this on the gold to silver ratio. We are day number 4 of, well, much bigger than what the 8-day run was. And the 8-day run was pretty big. The 8-day run was from July the 15th through the 24th. And over those 8 trading days, the ratio went down at least 0.5% every single day. So how does it react to that event? Well, it has the lower high rally, and a good lower high rally, but it ended up, but not great. A great lower high rally would have been up to about 91, but good. A pretty meh one would have been up to the 18 average of highs at 88. So it has this little bit of a rally, gets above the 18 for a bullish level. It's got to hold and have a nice break above the within the 18. It did hold it well. As a small attempt to break it here on the 13th, almost getting above the highs here on the 19th, but not just almost, didn't even get above the highs then. And then 3 days of congesting on the 18 average of lows, and then now day 1 of 4 so far started August the 26th, down 1.26%. Exitation of the 18 average of lows. Day number 2, if you don't find support where you're supposed to, well, it was supposed to, it didn't. Fast move to the next level. It's been fast, as the continuation has been on. 1.97% that day, 1.12% yesterday. So far today, 1.15%. Every day has been at least 1% so far of the 4. And now, of course, significant break to this low. But this is all happening while gold has just been having a phenomenal run. So now we look at where this is compared to even these lows. Well, that's it's been up a while. Let's take a look at this now in a more longer term. The price action, this red line where we are now, just matches. It's back to where we came from, and it could easily pierce below it and still be there. But 1, 2, and there's even more before then as well. Unfortunately, when I divide the future contracts together, it's just not working. But as it goes in here, gets above in here, small but noticeable move above it. And now the question is failed breakout or the comeback mode, because the comeback mode can even find support down to here. But definitely you're looking for a higher low to here, and then have some time where you can either resist this more, establish some short-term support, so that when you get above here, it's a big move. But failed breakout means that you get above here, you're going to end up drawing what would be a picture like this, because something like this happens. It has a fast move down towards here, may end up having some lower highs, and you most likely will have some lower highs along the way. And for me, I think that we are heading not only down towards this low, but I think in time, as we move into the next decade, that it's going to concisely take it out. My gold to silver ratio is many hundreds and hundreds. Close to it. It was well over 1,000. Now I bought some gold recently. It got dipped below 1,000 to one. So I have a little, almost 1,000 ounces of silver for 1 ounce of gold, basically, because I believe silver is going to be amazing, amazing moves moving forward. Okay, now let's move this to the ratio between the gold and the Dow ratio, as we are seeing it at 16.8. It came down close to 5 to 1, 5.9 back when gold reached its high the last time. And we got a lot more data in here. I don't know why it's not working on the silver because what I have, let me just go to the quarterly chart now. I have DGI, Dow Jones Industrials, divided by the gold, like the gold futures. But if I put the silver code like this in, it just totally messes up. That's why I was trying to get the gold to silver ratio going back to the early days in here. But as we see it in here, 1975, the ratio is 8.9. It goes down pretty much to par here, as we can see. There's the one number. Back in 1980, the start of 1980 is what it would have hit. And then during the 2000 market top, $250 gold bottom, ratio goes all the way up to 41. Of course, we mentioned about 5 or 6 here. And as we see, the Dow has had a nice little rally from its 2011 lows. And gold hasn't obviously done as well because this has went up along the way. Now, as the stock market was rallying in 2003, 4, 5, and 6, well, this really wasn't. This was going down a bit because, well, gold was rallying really well, really high. So, is this a high level? I don't got all the data because it would be nice to get even more data from this to see back again the 1950s, 1930s. But as it is, if it leaves this 18 average of lows, then that's one of the signs I'm looking for. Excitation of the lows for possible reversal of trend. Okay, let's take a look at palladium. And actually, I can get more data on palladium with the futures as well. So what I'm going to do is I'm going to type in palladium, and I can see there's the palladium futures in here. And I'm just going to click the first one in here. And I got a bit more data. Okay. So amongst this, we have all of these nice higher lows. It had this resistance point in 2001. Coming close, congesting in that area over the last few years in here, but it's had just a phenomenally good move. As far as the daily chart is concerned, major sideways correctionary mode. And it's in the somewhat upper end, but a little ways to go of the range. Lower end of the range is about a hair below 1300 down to about 1258. The upper end of this range is at about close to 1600, high 50, really high 15s, and we're at the high 1400s now. So another 100 plus to go to the top. But as it is, holding really well within this 18 average of highs. Let's take a look at palladium against gold. And on the daily chart, the ratio is about 1 to 1, 1.0. But what I'm going to do is I'm just going to multiply this by 100 just so I can see what the decimals number is for. Multiply it by 100, and it doesn't let me do it. I was going to see, because then I can see like the numbers better. Okay, let me just try to fix this up again. And I got it set. So it's 1.047 is what the ratio would be here. And this is just merely to see it on a clearer level line. And big moves, but we'll see this on the quarterly because there's a lot of data now for me to look at. And here's a spot where through I guess we got palladium from like 1980s, so we had a lot of resistance here around 4.7. It's not 474, it's 4 and 3 quarters, and then coming down to under a third, under 3/10. So 2001 palladium was worth more than 3 times more than gold. And then back in here, almost 5 times more, pretty much at around the same price now. But as we can see in here, that since January of 2009, for 10 years, palladium has been consistently overperforming gold, and it's still got a long ways to go to stop. Because if we're going to use this 18 average, we got the 18 average of highs. That was resistance here. It was resistance here. And that's the last time it's been resistance because from this whole decline, small correctionary rally here, but it only got to the lows, and now it's if this is it, it's just barely starting to break out from this low end here, and still has a decent ways just to get to this declining 18 average of low prices. Overall, I think palladium may be a diamond in the rough. It is most certainly it's so underknown compared to, of course, the big gold to silver, and even palladium's more popular and more known, and more as a third next level for metals as far as popularity is concerned, I would think. And that's where we're going to take a look next is palladium, or excuse me, platinum, because it's having an interesting couple of days right now. Yesterday it was up 4.26%. Today it's up 2.5%. As it has managed to get above the resistance that it had from April. And if I scroll back, I can see we have now reached levels last seen last May, which isn't anything spectacular, but overall, it is a nice little move. It's whatever you want to. It's not really really tough to say what major resistance is. There's maybe a range between 877 to 915, but it's gotten above that. Got above that range in here and it pulled back. But what do we see on some other stuff? Just a lot of up and down choppy action. We can see there was major support here. So it did test this previous support here in April from this. And another retest of this area. Higher low 867. Well, that would be okay. But getting above here, now you're starting to talk about this level of resistance next at around 1,000, which is a psychological number. Weekly chart going back from 2013, just like a lot of the other ones, doing a lot of choppy action, but which is could be good for trading. But still, the 18 average of highs in here on the monthly, it's just attempting right now to get above it. And that's as far as before. Had a little bit of attempt here in 2016, just a little bit of one though. And I gotta think futures would probably be here for platinum as well. I've So you get more of the same thing, but let's take a look at this on the 3 month. Back to 86. But throughout the 80s, it managed to, it was at low prices, 360 to 600. An okay run, but still holding from the lows in here like all the other metals are. It has come down and retested the 2008 lows. That's what the other metals didn't do. Gold didn't go back, silver didn't go back to that level. For that was, I think, $700 for gold and under $10 respectively for silver. Let's take a look at this against gold on the ratio. And again, I'm going to multiply it by 100. So it's 1.67 right now. And has obviously had a very clear break. And I don't have any data from before. But the resistance that we have in here, 1.2 down to about even par 1. So par to a small amount over par. And it did so getting above it here on July 2015. And since then, it has just been a clear run. But what it's doing is it's showing that it wants to break this move. At least that's how I'm looking at it. As the level of resistance in here is it's higher volatility, breaking any of these resistance lines, and that could just spark this thing to go well past that 2 number, have any type of significant nice moves that should come within it after that. And I'm not done within these gold ratios because the next one that I want to do is gold against, let's do Apple. Some people say the stock market's overextended, and then some people might say that gold still hasn't had. It's still way cheap. Getting above 7.6 on the gold to Apple ratio, well, we should easily have a nice little move that should get above 9 or 2.9, to about 9 or so. I don't really think too many people would trade this ratio, but wouldn't be surprised if there's a couple out there. But you'd have to pull a few strings here and there to get it done. But the whole point of this is that gold, Apple has been overperforming gold since the end of the .com bubble, as they say. Will it continue to do so for eternity? Probably not. But the last time it had an attempt to get above the 18 average of highs was in 2008 during the stock market crash. Since then, and since the markets have been rolling high, it's been moving large volatility moves. This went from 334 down to 28, up to 77. Now recently down to as low as 5 and change at 7.4 now. I mean, there's a lot of empty space here to fill. If it goes up to this, that's 28. That would be like 4x move. But you could easily see spots where it could work out where gold could go up like 3 times with markets going down a bit. And then that would make this maybe go up to like 50. And it's possible. But anyway, take care.